Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, the day we've been waiting all week here for the job numbers. So let's go take a look, see what we've got here. So for non-farm payrolls, this is what the Bureau of Labor Statistics bring out, the government, for the job numbers for April. And they actually revised last month, or for March, April was at first reported at 120. They revised up to 154. So that's pretty good news right there. We were expecting about 163,000 new jobs created for April, and it came in at 115. So mixed news there. We were raised about 34,000, but we're shy about almost 50,000 from where we were expecting forecast wise. So that's kind of a mixed bag right there. Next item is unemployment rate. We had 8.2. We figured it would remain the same. It dropped to 8.1. There are estimated about 350,000 people that just basically stopped looking for work and this fell off that grid. So that's the reason why it dropped. So a lot of people are saying that the unemployment rate's actually misleading because a lot of people just simply quit looking. Next item note is the average hourly earnings. So let's see if people are making more money. People in March went up about 0.2%. We figured it'd go up another 0.2%, meaning that your income's going up about 0.2%. It basically didn't really make any difference. Basically, what they said, the average hourly earning went up only 1 cent, so really equated to zero in this case. So let's go jump over and see how this is affecting the stock market. And stock market's actually down. The Dow is down about 150 so far this morning. So they didn't really care. A lot of them were looking at it as kind of a negative with their lower jobs number. But again, there was a little bit of information for the bulls and the bears in that market where we had the reposition higher, but yet we had a lower than we anticipated for April. But the big thing here is some uncertainty again with in Europe with the elections going on in France. They have a runoff, I believe, with the two presidents this coming Sunday. And then Greece looks like they might be getting a new parliament. So the concern with Greece, of course, is will the new parliament continue with the austerity measures that were agreed on by the previous parliament, or is it going to be a weak government and basically fall off, and basically investors lose money, more money in that case? So that's the big concern. And another item to note is the price of oil actually dropped less than $100 now. It was about 98.05 so far this morning, so about $98 for a price of oil. So that could be good for people commuting to work and such, or even in the summertime when people are want to go on vacations and such, or driving to different locations. So that's kind of good news right there. So let's jump over and see how all this is affecting the bond market and what interest rates are doing. So as a result, as we said, the Wall Street's not real happy with the job numbers, so they're pulling money out of the stock market. It's going into the bond market. We're actually getting a rally right now. We're up above the floor. So I apologize for this graph. The other one we're having some technical difficulties, so this is the graph I can pull where we're at right now. So right now, as we can see, we left off the day here just before the ceiling here, so we were kind of trading those range, and then we broke upwards. So we do have an opening gap here above here. We open up about 12 basis points upwards, and right now we're about 104, a little over 104 right now in this market right now. So good rally going on right now. Interest rates did improve today as a result. This gap could close at some point here. It could come back down, or again after they digest a little bit more, maybe they figured, okay, it's kind of a wash, and maybe this could close down either later today or tomorrow. So, but right now, interest rates have a nice improvement in there as well. You guys have a wonderful day. See you guys Monday, and again, stop on by Mike's Daily Market Report, subscribe, and then have your free updates emailed to you daily.